Good evening, everyone. Welcome to this interesting session on some technical insights. We have got something very exciting happening in the currency markets. So, the first chart that I wanted to show you, I have three charts today. So, the first chart that I wanted to show you is on dollar INR, or superimposed with dollar index. Okay. Obviously, dollar index is what drives all the other currency pairs. So, I want to see how the correlation works. If you look at this chart, the dollar INR is scaled on the right y axis, the gray and the white candles, and the dollar index is scaled on the left side, okay, on the left y axis, and it is the usual red and green candles. So if you see historically if you see, the correlation has been very high. We have been on the positive side, so the correlation has been very high, which means highly positively correlated, which means dollar going higher, dollar index going higher, then the dollar INR will also go higher. So the dollar will gain and rupee will be under pressure. That is the normal correlation. So if you see historically, this correlation has been very high. You see this blue areas. The blue areas are far more stronger than the areas below. Okay, the positive correlation is higher and negative correlation is only on some select pockets. But look at what has happened in the last 3 months. Look at this circle regions. The correlation has broken down and it is showing negative correlation. So negative correlation, what does that mean? That means that the dollar index is falling, but dollar INR is rising. So that is a very big dichotomy. That is a very big disconnect in the market. Okay, something historically happening very rarely. Now for the last 3 months, it has been happening regularly. The dollar index is falling. So if you see, the red and green candles are falling, but the dollar INR is rising. So huge disconnect. Let me show you another chart. This is a rebase chart of all Asian currencies. Okay, so you can look at dollar INR is the blue line, and yuan, dollar CNY is the red line, and all these are the other Asian currencies. We have Korean won, we have Singapore dollar, we have Indonesian rupiah. All these lines are here. You can look at the color code and you can understand it quite well. So what has happened since April till now? Since April till now, most of the Asian currencies have gained. Okay, look at how South Korean won. They have gained 7% since April till now. Look at the other currencies. Look at let's take Malaysian ringgit and Singapore dollar. All these currencies have gained 4%, 5%, 7%. Yuan has gained only about 1%. But in this period, you have rupee weakening by about 1.5%. See, the blue line is in the positive territory. So again, a very big disconnect. Something similar what I showed in the previous chart about dollar index correlated with dollar INR, negative correlation happening, and that is getting reflected here. Here, all the other currencies are moving in tandem. They are gaining because dollar is weakening, dollar index is lower. But surprise, surprise, dollar INR is going higher. And in a weak dollar scenario, instead of rupee getting stronger, rupee is getting weaker. Okay, so that is why this blue line goes higher. Now on the final chart, everything getting reflected on the dollar INR here. See, the dollar INR is going higher in this April, May, June scenario, and we saw here the dollar index coming down. So this is the dichotomy that I wanted to highlight, something which is very unusual and does not happen regularly. But in addition to that, let me give you some technical insights as well. You see this move of rupee weakening, we have entered that resistance zone. So if you look at all these red horizontal rays, it is between 86.70 to the previous all-time low of 87.95-97. So this entire region is going to be a resistance region because it had previous highs which were not broken before. Okay, so this entire region of 86.70 to 87.70, 87.95 is going to be a big resistance zone. And if you see, most of the momentum indicators have gone higher. And also if you look at the overall scenario, it is a weak dollar scenario. Dollar index is lower. So in a weak dollar scenario, the dollar will be weak. The rupee cannot be weak. The rupee has to strengthen. The rupee has to recover. Something similar to what I showed here. Just like all Asian currencies have gained and recovered, probably this blue line will also come down and get in parity with other Asian currencies. So what is the bottom line of this analysis? The bottom line is that there is a disconnect between dollar INR and the dollar index. Disconnect which historically has not been there, and suddenly we have seen this happening in the last 3 months. So this, I think, is a good opportunity for all dollar exporters to hedge their positions. You saw this decline in the dollar INR. This was a difficult period for exporters. Now it has come higher. It is a comfortable position. So all exporters, I would strongly recommend to restart their hedges and maintain good hedge ratios. So exporters should sell, should hedge their positions. Dollar INR premiums are slightly lower, but nevertheless, weak dollar scenario, rupee will ultimately gain. There is warmongering happening. Crude prices are higher. So probably that is one of the reasons why rupee is under pressure. But ultimately, if dollar remains weak, the rupee has to recover. The rupee cannot be weak when the dollar is weak. Okay, so strong recommendation to all exporters to hedge, and importers can wait a while. It has gone up suddenly, I am sure, with the war cooling off in some time, in due course of time, we might see rupee also recovering. So dollar importers can hold on for a while. So that's it from now. For more insights, stay tuned to this community.